Hey, folks. Welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, March 8th through Friday, March 12th, 2010. Well, folks, here we go. Weekend technical analysis going into the week ahead. We want to take a look at the overall technicals of this market and what could happen next week. Looking back at last week, we saw generally a positive week on Wall Street, with the markets overall positive based on a Friday's non-farm payrolls number that really gave Wall Street an extra little bit of a bounce. We saw on Friday the Dow up 122 points, Nasdaq up 34, and S&P 500 up about 15.5 to 16 points. Basically 1.5%, a little less than 1.5% across the boards on the indexes. Now, the key was that non-farm payrolls number. And again, you're looking at the SPY intraday 10-minute right now. We're going to focus on that to start with once we get into the charts. But what I want to do again is just talk a little bit about that jobs number. Now, the jobs number was a beautiful play here. And the reason why it was a beautiful play on Larry Summers' part was because it was like slow pitch softball. For those of you that are softball or baseball fans, think of the pitcher underhanding the ball to the batter and letting the batter swing at it and just knock it out of the park. That's essentially what was done there, because he came out earlier in the week and basically said, oh, the jobs number is going to be worse than expected because of all the snow in February, and this is going to have an impact and so forth. And ultimately, that was not true. But what it did do was set the market up for a bad number, so everyone expected a bad number. Therefore, when a good number came in, it was off to the races. So you can see how kind of these government officials or pseudo-government officials can have the impact on the markets that they want by really having a key number said like that and kind of preparing the market for a negative number. I mean, eventually the market will adapt to that and start to kind of, anytime someone says something bad, they're going to say, oh, well, he's probably just lying anyways. But for the most part, that is exactly what the market did. So a slow pitch in softball or baseball underhand, the market was standing there with a big baseball bat, slamming it out of the park, and that's how we had a nice rally on Friday. Again, the dollar overall started slightly higher and then fell off as well. That added fuel to the fire. And the markets, as you can see here going into the charts, essentially gapped up. Beautiful gap up. We gapped above this key level of 113, and once you're above 113, it was off to the races to the upside. A little bit of a squeeze all the way up to this 114 level. Then look at this little time of consolidation. Beautiful little sideways consolidation. It was actually about 2 to 3 hours of consolidation, which is, again, a very, very solid consolidation pattern. And again, for anyone that follows the methodology in the money stocks, you should know that pattern. That pattern is an up move here, followed by sideways consolidation. Look at that. It's exactly what this pattern is. This is called an in spirit of or bullish flag pattern. So anytime you see that, you have to expect a little bit more upside. And the markets generally did not disappoint, with, again, late in the day. For a lot, I think a lot of what had happened here was people were shorting the market thinking it would reverse. And when it didn't even give them a little pullback, they had to cover late in the day. And sure enough, that caused a little short squeeze into the close as well. Up, up, up. A little bit of a minor pullback, and then a little bit of a bounce back in the markets. Now, that was last week. I mean, this was technically on Friday. Thursday, we had a flat day. If you go back to Wednesday, generally you had a flat day. On Tuesday, you had generally a flat day. And on Monday, you had a little bit of an up day as well. So overall, the market, the first 4 or 5 days of the week were very, very neutral. It was slightly positive, nothing crazy, and then here we come into Friday with a big rally, end of the week rally, a little bit of a short squeeze off the Larry Summers comments that, again, did not pan out for that jobs report that we got on Friday, 9.7% unemployment as it maintains that. All right, so that's last week. What happens next week? Well, let's talk about the charts. Number one, what are your levels of resistance on an intraday basis? Number one, you have to say to yourself, resistance here for Monday, going into Monday, will be this high pivot from Friday's high at 114.35. If you get through that, believe it or not, there's not a lot of resistance until you get really to the highs of the chart going back to January. January highs made mid-January were at the 115.15 level. Again, 115.15 on the SPY. Those will be the big, big levels of resistance. When we get to the bigger time frames, you'll be able to see that as well. All right. But again, so far on Monday, intraday 10-minute, if you gap down or open flat, the high of the day would be your first small resistance level. If it gets through that, it really could continue to go up. And again, you might say, well, what are the odds of us hitting that 115 high or so? The odds are pretty decent. I mean, it is definitely on the decent side. If you didn't hit it, it would be a very bearish indicator for the markets. And the reason I say that is because you have a situation where it would be creating a lower high. and a lower high in the market could be viewed as very bearish. So, overall, you'd probably have to estimate that this coming week you would expect to hit the highs probably with about a 70% chance, at least 70% chance that you hit the highs of 115. After that, who knows? I think there's a major resistance. There's going to be a double top there. Could be forming an M top as well, which is a very bearish signal. And overall, the markets are extended. Don't get me wrong, folks. I mean, the markets here are extremely extended on the short term. If we flip over to the 60-minute chart, take a look at this. I mean, just going back even to the 25th of February, which is just a little over a week ago, the markets were at 109. Now we're at 115. I mean, that's essentially a 5% move. I mean, if you want to even talk about a bigger move, take a look at this. I mean, go back to the low here in early February on February 5th, and the markets, and let me make the chart here shrink a little bit so we can see it a little better. All right, so here's your low on the 5th of February. You see that low right there. Look at the extension move all the way up. I mean, this is at this point a huge move from 104.50 now to 114.50, almost as the high of Friday was just about at 114.50. So you're talking about, almost, essentially a 10-point move at that point. 10-point move is just about 10%. I mean, it's a little shy of 10% because we were above 100. A 10-point move at 100 would have been 10%. So I guess it's probably about 9.5% move or so, around 114.50 or so. But getting close enough where it can be counted probably as a 10% move up. And that's all really in 1 month. I mean, you're talking about here from February 5th really until March 4th, which was Friday, basically a 10% move in 1 month. That's astounding, folks. Does not happen very often, especially on a replay bounce. The bounce has been tremendous, and that's coming, weirdly enough, that's coming off of a drop of almost 10%. I mean, if you go back on the charts a little bit longer here, if we scan back, I mean, here's your highs going back on, the mid-January, January 8th, all the way through. You talk about the highs, pivots, January all the way through the tops of January here, and then the low over here on early February 5th. You're talking again in basically a month's time. You dumped 10%. Now a month later, you've recovered it all. So again, where does this all tell us it's going? Again, overall, you have to think that this market is slightly extended. I did get the sense on Friday, folks, and this is a beginning of a signal that there's a little bit too much euphoria out there, too much happiness, when too many people on TV, and this is pretty astounding. Almost everyone on TV that I was listening to, and again, I scanned through all the little platforms, and I use it as a contrarian indicator, were very bullish, extremely bullish. Now, does that mean we're not going to hit the 115 high? No. I mean, there's still a very high percentage chance that we do that. The question is, does it mean we go higher? And that I'm suspect of, folks. That I am suspect. I do think that this market is, again, due for at least a short-term pullback, even from just a massive move up we've had over the last month. You got to look for at least a little bit of a pullback consolidation off of that. And again, that's what I would start to look for next week. Getting ready to see if you can have that pullback. What you're looking for in the charts is a pivot top signal. Now, a pivot top signal obviously will tell our premium members at the research center and the chat room when that does happen, when we see it. But you're looking for signals like topping tails, like in spirit of flag patterns, M patterns, possible double tops. All these different things can be looked at as a possible top, and then you look for obviously a down day, and you need confirmation of that down day. And again, our premium members will get the premium guidance to be able to navigate through that and be on the right side once we see those signals. And again, I've begun to short a little bit, as my premium members know. Slowly accumulate out there, but again, still have some more to do as we come into the next week period, really isolating up and looking for that pivot top to be put in, and we'll see again where it is. But in the near term anyways, you have to be going into the early portion of the week looking for a little bit of a positive. I would have to say early in the week is positive. I looked at economic news, and I'll go over that right now with you guys. Economically, we are not seeing a ton of news until really on Wednesday. Wednesday at 10 o'clock is, I think, the first major news break of the week. March 10th, 10 a.m., wholesale inventories, crude inventories at 10:30 that day. So Monday, Tuesday, without any key economic news, you have to look towards Europe, towards Asia for any key moves that would create a fall in the dollar or a rise in the dollar. If the dollar can get a boost because of problems in Europe, then the markets will fall. There's no doubt about it, folks, that the market is tied very much to the dollar. So if the market, again, if the European market, let's say, another Greece situation happens, or the Greece bubbles up again, or is it Spain or Italy or who next, that comes through, then that will create major problems. Overall, the dollar will strengthen, and then the markets will fall. Other than that, going into early in the week, it's hard to know exactly what would create the fall. Again, you need some sort of surprise news that is not on the economic calendar. All right. Looking at Thursday, guys, initial claims, obviously jobless claims on Thursday. That's really, about it for that. Retail sales on Friday. There'll be some retail sales coming up on Friday. Michigan sentiment, business inventories. I mean, there's a few things later in the week, but it's going to be a pretty quiet week on the economic front compared to what we saw last week, which was a huge amount based on the non-farm payrolls and unemployment numbers out there. Earnings-wise, you have a few key earnings plays this week, but honestly, nothing major that I'm seeing. Nothing that's a huge play like Apple or anything like that. Now, looking at a couple of these stocks, folks, let's go to Apple Computer here. Apple Computer. What a day on Apple on Friday. Friday, again, they announced that when they're gonna start to release the iPad. The stock rockets up, closes near the highs of the day, new all-time highs for this stock, folks. The question is it overbought or oversold? Well, again, it's getting toppy, no doubt about it, but it doesn't mean it's done. Does not mean it's done, especially if you have light volume early in the week in a positive market. You have to look towards Apple as having a little bit of a positive move there as well, very likely. Okay, other stocks that have had a good week last week. I mean, a lot of stocks obviously had a fantastic week last week, but Goldman Sachs, the last 2 days of the week had a huge move. Sure enough, as Goldman Sachs goes, so goes the market. I mean, we all know the Goldman involvement in the market and everything like that. All right. Also, ExxonMobil, very nice move on Friday on Exxon, up $1.07. If Exxon's up, we know what that means.